Well, everybody who is on the call so far, guys, if you have a question, there's already some coming through. If you have a question for one of our panelists, go ahead and start putting them in there right now. We are going to get to Q&A. I'm going to ask some burning questions that I have personally first. And also for our panelists, Scott Jelinek, John Jackson, Pace Morby, Lou Brown. I'm so grateful you guys are here. I think that this is going to be absolutely phenomenal. Really excited. Pace, believe it or not, you're the one that kind of sparked my interest in doing this.
Because I've been talking so much smack about Burr for the last 4 or 5 months.
And I wanted to chime in, but I'm like, you know what would be better if we just kind of got some people together. And the Burr person actually who I wanted on could not make it tonight, but we'll do something specific.
I think he saw my Instagram post and he didn't want to show up.
Maybe that's what it was. But guys, if you have a question, make sure you go ahead and put it in the chat or put it in the Q&A. That would be better if you put it in the Q&A because I'm going to actually start at the Q&A. But you can put it in the chat if you'd like to. For our panelists, if you want to go ahead and start typing in your Instagram handle, your website, whatever it is, wherever you want to send people to. I know you all have a giveaway, so don't put that out there yet because we do have some giveaways that we're going to. If you're on the live call, you're going to get some incredible stuff. I've already been talking to these guys. We're going to give some really cool stuff later. But if you want to put however people can contact you, whatever it is, go ahead. You can go ahead and do that, especially Instagram. I know a lot of people are Facebook, whatever it is. You guys can start doing that. But 60 seconds, and I'm just starting at the top left. I'm going to start with Scott. 60 seconds. Scott, I want everybody to answer this first question. Give us your impressions of our current real estate climate. We're about to have a change in the highest office of the land. If that affects your answer, I want you to tell us about that. But 60-second version, the quick version, we'll come back for a longer version in a little bit. 60-second version of what is the current state of real estate in America today as you see it.
All right. So my short answer is going to be, I don't know. And as well as I don't know, nobody else does either. So our market right now is insane hot. And I think the entire country is the same way. We've all been talking about there's going to be this bust, there's going to be this downturn. And we feel like it's almost inevitable with all the defaults that are out there. But the demand is still so high and interest rates are still so low that I'm not confident it's going to be overwhelming and price crushing again. I don't really know. I don't think it is. I think we are going to have, mass foreclosures, but I don't think that's going to outweigh the demand. So I'm not really sure. But again, only time's going to tell. We're going to see what happens.
And Lou, you just went from my bottom right to my top left. So I don't know if that's because you raised your hand, but I'm going to have you go next. Lou, 60-second version of our current state of real estate as you see it today.
Wow. So if things come to fruition the way we are being told, taxes are going to change dramatically. Whenever there's a shift between Republican and Democrat, then there's a tremendous shift in tax policy. So the policy that they are proposing is to raise capital gains to 40%. They're proposing to take away all of the benefits that we get. Pretty much, I haven't heard of mortgage interest deduction yet, but I've heard everything else. So 1031 tax deferred exchange, gone. The ability to protect your retirement account, gone. There's just so many different aspects of taxation that could change if cooler heads don't prevail. So that is concerning to me. We've got some solutions for that, but as it stands right now, it ain't pretty.
Pace, current state of real estate as you see it today.
We run the whole gamut on real estate investing. I have 65 new homes we're building. We've got 24 houses in fix and flip that are, beat up mobile homes all the way up to $600,000 homes. We buy a ton of sub-2, ton of seller finance. So I have my fingers in a lot of different places. I can tell you, I can't find enough projects. We're in 5 different markets: Phoenix, Atlanta, Florida, Texas, and just jumped into Fort Wayne, Indiana. I actually went out in the field today, which is not something I typically do. And I met with all my foremen and I assured them, hey, we're going to find more projects because they're starting to lose guys because I can't keep them busy enough. What's happening is the homeowners are just throwing their houses on the market rather than dealing with cash buyers. Not as much as it was in the past is what I'm saying. It still is happening. We're still getting deals. But I'm having a harder and harder time finding good quality deals because these houses are selling so stinking fast because of the low inventory. I can tell you also the seller finance world. I am getting houses where people are just handing their houses over to us and asking for $500 and as a down payment type of stuff. It's been really interesting where I can't get enough fix and flips, but I have an overwhelming amount of sub 2 and seller finance opportunities, which is awesome. So, whatever part of the world you're in, there's advantages and disadvantages, but I think the rest of the year, which is what your question is, I think the rest of the year, the prices of homes are going to continue to go up. And with the Fed talking about how they're not really raising rates for the next 3 or 4 years, I think investors are going to continue to buy. It's going to be hot.
John Jackson.
Yeah, I did not realize this was a real estate show.
John is our class clown. If people didn't know, he's our comedian.
Yeah, so I've been in this a long time. Not as long as Lou. Lou has, but I've been doing this since 2003. And before I was in the stock market, I'm president of the real estate market. I was in the stock market and a day trader and options trader. And so I spent, a tremendous amount of time and years studying technical analysis and charts and markets and everything. And at the end of the day, all markets are cyclical. So I think what we're seeing right here is, 2008 had subprime mortgages and it all just collapsed, right? Well, 2020 had a virus. And now 2021 has a virus and the Biden administration coming in. And to me personally, I just don't see it holding up. I think we may be basically like in 2007 right now, if you will, with the market. So it may continue up for a little bit, but I see it coming down. Now, how hard it's going to come down, I don't know. But with what I deal with in real estate is probably different than, I know it's different than what Scott deals with. Maybe some different than what Pace deals with in the sense of the kind of property I look at. I look at nice houses, $250,000, $300,000 houses, et cetera. I'm not dealing with wholesaling type houses. So I'm dealing with really nice move-in ready houses. And I'm seeing days on market go up in a lot of areas, even though people say it's a hot market here, there, and there. I'm seeing 60 days on market, those numbers still holding strong and going up actually in a lot of markets, because that's what we target is 60 days on market.
John, are you primarily focusing on Texas only?
So I'm in Texas, so I focus on Fort Worth and Dallas, but I've got students all over the U.S. Like we just picked up, we've got a student in Vegas now. We've got Maryland, all over the place, and I'm still seeing days on market, because we look at again 60 DON. That's what we hit, and I'm seeing those numbers very well. I just pulled numbers in 3 counties in North Carolina, and there's over 3,000 houses, 60 days on market. That's a lot of houses sitting there. And what happens is those owners need a plan B. And in my case, I'm plan B. But what happens is when you see these houses on days on market go up, at some point those homeowners have to come up with plan B.
Guys, the reason I asked that question to start off with is because we've been hearing, I feel like for years, that the market is going to drop. We've been hearing this for years, but what's actually happening, and this is nationwide, especially in the bigger markets, inventory continues to shrink. It continues to shrink. And when it keeps shrinking, prices keep going up because there's still folks who want houses and need houses and still want to buy, consumers. But inevitably at some point, maybe with an administration change, I don't know. But at some point, we are going to see, in Pace, you just kind of mentioned it, you're already seeing, and you have been seeing a rise in folks wanting creative options versus a lower cash offer. And that's why I wanted to kind of bring this forum together to talk about creativity, creative financing, creative finance strategies. I know you guys have all done creative things, some of you more than others. But Lou, now that you're at my top left, I want to kind of start with you. How prevalent is creative financing? How important is anything creative, especially now versus in the past?
Well, I haven't been around as long as John Jackson, but I've been buying, holding, and selling property now for over 40 years, Brian. And one of the funny things that I've realized is that markets are manufactured. That's something I didn't understand in my early days. I now do understand them. And I understand that when I got into this business, interest rates were 21%. Well, that caused the market to be open to creative financing. So the first double that I bought, the first duplex that I bought, was with the seller allowing me, number one, to take over their existing financing on the property, number two, carrying back financing for his equity. So it definitely causes things to change. And certainly taxation, for example, would be something that could benefit us in the future, meaning if they change the tax rules, then people are going to be much more open to creative financing because of capital gains taxes. Now, we've got some alternatives and some solutions to that, but the idea is that any kind of change, upheaval in the marketplace does open doors for possibilities. So I'm looking forward to it, frankly.
And kind of same question, Scott. Creative financing. I know you have, and I forgot to introduce you guys. I forgot to give you a chance to do that. Which, you know, for me, it's like these are all like my friends and my brothers. But so Lou, I'll come back to you. Scott is from, people are asking, Scott is from Virginia Beach, Virginia. Scott, you have talked openly about your specific strategy when it comes to real estate investing. I don't want to get into your backstory, which is what allowed you to come up with this new strategy that you call slow flips.
Right.
Briefly, in 20 or 30 seconds, tell everybody what slow flips are and talk about why that's a strategy you're probably going to continue no matter what the market is.
So the very short version is I firmly believe through pain that I've taken in the past on paying properties off. And I know most people hate the idea of free and clear properties. I love it, but I'm impatient. So we've come up with a strategy where we pay off our properties over a period of 5 years. And simultaneously, we sell them with long-term owner financing for 30 years. That's the short version. We buy them on a 5-year mortgage and sell them on a 30-year mortgage. And so we don't make much of anything for the first 5 years, and then it's pure cash flow for the duration.
Is that a strategy, Scott, that you feel like can work in any market cycle? Is that a strategy that you're going to continue, or are you going to try to pivot?
It can work in any market cycle. It doesn't work in every market. So there's certain areas, like you're in a market where it works. There's certain areas, certain cities where you cannot find prices that, you know, the cash flow versus the purchase price doesn't fit where you can pay it off short term. In my market, it didn't work either until 2008. And then houses that were 120 went down to 30. And so we're able to do it now. And we still have, I call it the gift from the bust. We still have them where we can do that. Not every market, but I believe in every market cycle, because even now where they're so high, we still find them, because the low end, the banks don't want to do mortgages on. And so they're kind of in limbo between homeowners want them, and yet the sellers can't sell to somebody with a mortgage. The homeowners that want them can't pay cash, and the sellers need the cash to sell. So we get in the middle.
Scott, is it a situation where you're just, if it dries up, this particular strategy, if it dries up, you can't find the houses at the prices that you want, that you're just not going to do that strategy and not going to do anything as far as hold goes?
No, I would probably change and reevaluate. I've been buying since 94. I used to buy conventionally. I stopped, the conventional model in 2007 and 8. I would probably pivot and come up with another strategy, but still with the focus on paying them off. I might not be able to continue on the 5-year plan, but if I couldn't find them anymore in the price points I need, I'd probably continue on, just pivot to different price points.
John, I want to bring you in and ask you about lease options, because you're the lease options king. Based out of DFW, you kind of run the entire state of Texas, and I know you have a nationwide program as well. Why lease options, and can lease options work in any market cycle?
Yeah, so I started in 2003, and in 2003 up until 2007, end of 2007, it was a booming market, kind of like what we have been seeing, and it was still working very, very well then. What happened is in 2008, when everything crashed and a lot of investors were, running for the hills, filing foreclosure and bankruptcy and this and that. In 2008, lease options, I was so busy with lease options, I didn't do any marketing to sellers for like 4 months because I couldn't keep up with the leads. And of course, back then I didn't have a team or didn't have VAs or anything like that. But I would literally have like 30 houses every month just from doing no marketing, because investors desperately needed a plan B. So yeah, lease options work in every market. They are stronger in a down market because lease options are creative. And so they tend to be, as I keep referring to that plan B, because at the end of the day, every homeowner, whether it be an individual, owner-occupied house or an investor house, they want, normally they want their cash, they want full price, no commission. When they can't get that and it's sitting there and it's costing them money, they need that plan B. And so that's where lease options come in. So lease options work in every market. In every, whether it be an up cycle or a down cycle. I've done this since 2003. The only place in the US from that I just couldn't seem to get lease options going as far as different markets was Hilton Head, North Carolina, because all Hilton Head is apparently is an island with a bunch of condos and really old people. That's not a great area for lease options.
That's the only place in America where they don't work, ladies and gentlemen.
That's the only place I've ever found in 18 years.
Pace, you said something really interesting when you were kind of giving your 60-second version of how you see real estate today. You said that you're actually seeing more homeowners today want to accept and be or willing to accept something creative. Is that, and in your multiple markets, so it can't be really market specific. Why do you think that is? What are you hearing from the homeowners?
Well, there's a couple of reasons why a seller sells to you on creative finance, right? If sub 2 is one bucket, sub 2 is typically I have pain, I have distress, and seller finances, I have motivation to get a really high price, right? So on seller finance right now, you're getting a lot of sellers that are saying, wow, this could be top of the market. This might be my time to strike, sell it for the highest amount possible, and be able to, make a good return on my investment long term and not have to deal with any more tenants. So top of the market stuff, you're going to see a lot of seller finance opportunities popping up where sellers are saying, you give me the Zillow number and I will sell to you. In fact, we just bought a house in Atlanta, $1.3 million home in Ansley Park, very low amount of money down, 2% carry, 30-year amortization. And we're turning that into an Airbnb that'll produce 12 grand and I'm paying the seller $3,200. People are like, how are you doing that? I'm like, I gave the seller retail value, right? So in a seller finance situation, when you're at the top of the market, you're going to get a lot of sellers that are trying to strike while the iron's hot. Mm-hmm. In sub 2, last year, actually 2019, shortly after I came out to the REI live event in Birmingham, we bought 19, 17, and 18 sub 2s month after month after month through foreclosures, right? Which is crazy because even though the market's going up, market does not prevent people from making bad decisions in their life, right? You're always going to have foreclosures. You're always going to have those things going on. And even during the pandemic, even with the moratorium on foreclosures and all that kind of stuff, it wasn't a moratorium on people's problems. And so we were still and still are buying a lot of properties, holding them, not just assigning them, but holding those sub 2s long-term because people actually have more problems today than they did before the pandemic. Even though the moratorium on foreclosures is there, there's not a moratorium on people's need for cash. And with these little stimulus checks that people have been receiving, what we've been doing is helping people out of their home, catching up on their arrears, giving them cash, helping them into getting to a cheaper apartment. The pandemic has actually created a tremendous amount of opportunities for real estate investors. And your main question going into this, Brian, was how do you see creative finance being huge for the future? Honestly, some people say creative finance is a good tool to have in your tool belt. I say creative finance is the tool belt, and like wholesaling and fixing and flipping are like one screwdriver and one hammer in that tool belt. You have to have creative finance. You absolutely have to have creative finance. If you're just a wholesaler, if you're just a fix and flipper, creative finance will 2x, 3x, or 4x your return. You have to have it.
I love it. I agree. Almost everything I've done recently has been creative ever since I learned how to do stuff outside of wholesaling. Lou, and I want this to be a discussion. If some of the panelists, you guys have questions for the other panelists, please feel free to jump in. Lou, I want to start actually digging into strategies, specific strategies. And Lou, and obviously Pace, we're going to come back to you with subject 2 as well. You actually own the website sub2.com. Lou, late on the game right there. Late on the game, right, brother.
I was over in the trust world, not in the sub 2. To me, subject 2 is one of the ways that we buy. I definitely love subject 2. I always want to get the deed. If I can possibly get the deed, that's my whole game. And for me, because I'm experienced and I can go sit down and talk with the seller and I can always end up with the deed, just because I've got so much experience of what to say and how to say it. That's what happens in my world. But in other people's world, when they're going to talk with that seller, it's so important that you have your act together, because if you don't say the right things, why would anyone allow you to take over their existing financing in their name on their credit report that they paid the closing costs for, and allow you to just step in and take over the payments? Maybe you're going to make the payments, maybe you're not going to make the payments. So those are concerns that the seller has. So we go in with game on. When we are talking with the seller, we have a book that we give the seller. We tell them who we are, what we do, how we operate, who we are in the marketplace. We exude credibility when we go talk with the seller. And then we also have a presentation kit. So when we go sit down with a seller, we have a story to tell: who we are, what we do, how we operate, how we can help, how we're different than everybody else. And for a real estate investor, I think, is particularly someone getting started, they don't know what to say, they don't know how to say it. So we actually developed the presentation process. This was back in 2003 when John was born. And when that happened back in 2003, it changed my business dramatically. Now I never go out on a seller call or talk with a seller without doing a full-blown presentation with them. And I think knowing what to say and how to say it is a critical thing. So in the process of identifying what creative idea you're going to be able to use, we actually, before we even go out to visit with the seller, come up with 3 offers to make. And I think that's an important thing too, especially for someone just getting started, that you don't have a one and done type strategy. It's really interesting. Just yesterday in my office, a wholesaler brought his entire team. There was 10 people in my office, and I literally taught them this whole idea of creative financing, because they only ever offered cash, period. In years and years and years of being in the business, they've never really looked at it from that point of view. But as Pace was saying, hey, you can offer more on a property when you're offering that owner financing or anything else. So we generally go in expecting to get the deed on the property. If we can't get the deed on the property, we back down to what I call agreement for deed. If we can't get agreement for deed, we back down to lease option. If we can't get a lease option, we back down to option. So we've always got a game that we can play there with the seller without getting up and walking out.
Pace, I'm curious. I want to get you back in. Pace, I'm curious how you just heard kind of how Lou kind of handles his seller appointments. And things have changed, by the way. There are a lot of folks that aren't going on seller appointments anymore. A lot of it's just over the phone now. I'm curious, how do you approach a seller appointment when it comes to seller financing, and how you offer? Do you have different tiers? Do you just go straight for sub 2? How do you kind of handle your
no,
seller
this is one of the greatest questions you could ever ask somebody that's trying to get into this business. So people ask us, and there's actually one of the first questions that was asked in the comments was, how do I find a novation agreement, or how do I find novation deals, which is a whole nother aspect of creative finance? My answer is this: we never market for sub 2, seller finance, wholesale, et cetera. We only market for distressed property owners, right? So we only find those lists. Even we go from zero equity to high equity. And obviously high equity, you're typically going to be buying on seller finance. But we start with a cash offer always first and foremost, because for us, and then everything else that Lou said is exactly spot on. We go in first for cash. And the reason for that is because it gives us all the other information that the seller has been aggregating from all these other investors. And I say, well, Mr. and Mrs. Seller, I imagine you're probably getting offers somewhere around $120,000, $125,000 max. And I flush out their number and I get a feel of where they are. I always call out the black swan, right? The black swan is the other wholesalers that exist, but nobody ever calls them to the forefront. We make sure we call them to the forefront so we know who we're battling against. And then based on how that seller reacts to that type of cash offer, I can basically paint the picture of which category do I need to take the seller down in order to solve their problem the best as possible. So at the end of the day, all the panelists are going to agree with this. Our job is to solve these sellers' problems. Cash is probably 40% of what we do. Seller finance, subject to, and even partnering with the seller on a novation agreement, and even doing options is the other 60%. So great question, a great answer. By the way, Brian, I know you mentioned before you jump onto somebody else, I want to just plant a seed in your brain. I would love to talk to the other panelists, brother to brother, about tax implications of each one of these strategies. Lou and I are probably the most similar on our tax strategies, depreciation, 1031 exchanges, those types of things. I would like to know from like John, especially John on lease options, have you figured out, even though you don't have the deed, have you figured out how to get tax advantages such as depreciation, even though you're not the deed holder? Have you ever ran into anything highly creative that you've been able to do that?
Yeah, I just use a burn phone so the IRS can't find me.
Good plan. Good plan.
Yeah, I just, I think my name is Scott Jelinek as far as the IRS knows. So,
Hey, Pace, if you didn't know already, you cannot ask John a straight question and get a straight answer.
No, I love it. I've watched almost every video John's put out and podcast he's been on. I freaking love this guy. He's amazing.
Man, I didn't know that, man. That makes me feel good. I didn't realize that Pace. It used to be that on lease options, and I'm not a tax strategist by any means, but it used to be on lease options. If you could defer the rent credit till the following year, till that option was exercised. Now I don't think you can do that anymore, and even if you could, it wasn't a huge amount. It wasn't a huge amount of money. But yeah, because there's no note being created or anything like that, there's really not a big tax benefit anymore for a lease option anyway. Yeah, because you're not creating a note, the property's not depreciating, you're on title anyway. So.
Love it. Got it. Yeah. So, I mean, Lou's brought up tax advantages, and, back in 2017, Trump rewrote the tax code. And if any of the people in the audience want to read a really good book, Tax-Free Wealth by Tom Wheelwright is absolutely amazing. Talks about the tax code being rewritten in 2017 to benefit all of us real estate investors. But I think Lou's right. I think we're going to have some pretty serious implications with the Democrats coming into office and changing the way that real estate investors get hit with taxes. However, creative real estate investors such as Lou and the guys who have been around for a long time have like written book after book after book that a lot of us are just following in their footsteps. The reason why creative financing is so amazing is because these guys will come along and go, okay, well, you're telling me I can't do a 1031 anymore and get these advantages. I'll do something else to get the same advantages. So I'd love to hear from Lou on, what happens if we do have a serious change. Are you going to then hold your properties and not sell them, which would then, make you have to take that tax? What's your feeling on that, Lou?
Pace, that's a great question. And there is an answer now. If you had asked me this a few years ago, I wouldn't have had an answer for that. But I've done a tremendous amount of research, of course, on the subject of trusts. One of my favorite things on the planet is this concept of trusts. And started using them way back in 1983 and been using them ever since, and love trusts. Well, what I teach is land trusts and personal property trusts. And that's certainly something that makes sense for the average person who's doing real estate. However, there's no tax advantages to that type of trust. But there is another type of trust. I call it the elite trust. And the elite trust has amazing benefits for people like us, the panelists especially, but really anybody that's paying at least $16,000 a year or more in taxes. There is another alternative. And the elite trust is if you flip the script, if you flip the coin on a land trust, it's the exact opposite of what a land trust is, but it provides tremendous tax benefits. And one of the most important things is that when that elite trust owns the property and sells the property, 100% of the proceeds goes back to the trust, and there is zero need for a 1031 tax deferred exchange. So it's going to be a big deal coming up And I think it's going to be pretty exciting too for people to learn about that. But it's something that I've delved in with some years ago, and that's what I use in my world these days.
Brian, can I jump on that real quick? I don't mean to hijack. I'm just excited that I'm on this panel with these badasses.
Go for it.
Do you mind if I take a couple of seconds? So
one more second.
Guys, everybody that's paying attention, everybody I'd say in the last 10 years has had a really good run, especially in real estate. So look at the average fix and flipper. A lot of guys that I'm in masterminds with, by the way, I just joined a mastermind Lou is in, and I'm super, super excited about. So these guys that are fixing and flipping, let's say they make $500,000 in short-term gains, right? What's their tax implication on $500,000 in income, right? You're probably $200,000 to $250,000 is going to go to taxes. That's, if they're taking $500,000 home. I look at buying, it doesn't have to be sub 2 or seller finance. I just feel like it's incredibly easy, a lot easier to go sub 2 seller finance route in accumulating properties. But I look at my buddies that are writing checks to the IRS for $200,000 a year, $200,000 a year. And then they tell me I don't have enough money for down payments to buy rentals like you do, Pace. And I'm like, well, if you would have taken the $200,000 and bought rental properties and utilized depreciation or cost segregation, you would have been able to do that. Their response to me is, well, if I take depreciation, I then have to worry about depreciation recapture, which means I have to pay that back at some point when I sell the property. So what that means, guys, is this. If I make $500,000 and I write the government $200,000 of that every year as a fix and flipper, right? I could take that $200,000 and probably buy somewhere around 8 to 15 sub twos, with down payments and getting the property stabilized and stuff like that. The depreciation on that would put me at a net zero. I wouldn't pay really any taxes whatsoever that year, utilizing depreciation, which is the IRS code, right? Now, why people don't do that is because they're not educated on how to avoid, when you sell that property at some point, the IRS is going to say, well, now all that depreciation, the tax credits that you took, you have to pay it back. So Lou is talking about doing a 1031 exchange, which then what we talk about is kicking the can down the road. I'm avoiding the tax implications on a 1031 exchange every time I do it. Okay. Now, there's even ways to avoid the tax altogether, which is amazing. Lou is freaking bringing down some amazing game right now. And I don't think people quite understand the power of what he just said. What did you call that, Lou? You called it an elite trust?
I call it the elite trust. And Pace, you have nailed it. That is exactly one of my philosophies from the very beginning was, why in the world pay taxes if you don't have to pay taxes? And it's a whole lot more work. So I'm a less work, less deals, more money kind of guy. And with that in mind, you've nailed it on the depreciation benefits, right? And the second thing you mentioned, it cost segregation. That's another aspect of it in the, let's say the average world of doing taxes. It's a wonderful thing when you can take a home and write off parts of that home much faster than the home is typically written off. So in straight line depreciation, that's 27 and a half years after you take off the land. Well, that's not so pretty. But it's really pretty when you can write off the component parts of the home much faster. So you can write off certain things 5 years, 7 years, 15 years. And it's literally the sticks that hold up the building that's written off over 27 and a half years. But everything else can be written off so much faster. So that increases the depreciation that you have. And that increased depreciation, those losses on paper, those losses can be used to offset your ordinary income. So that's why we like selling some properties along the way, because we can actually use an offset using the depreciation that we've got in the bucket and zero out the taxes, exactly like you said, Pace. So I am a lover of, and I think everybody should master taxes, because it reduces exactly what you said. It reduces the amount of work that you have to do. And who wants to write a big fat check to people that throw it away anyway?
It's funny when you mentioned writing a Pace, you mentioned writing a big check to the government, and Scott's over there like only 200,000. That's it. But Lou, Pace, great segue into 2 weeks from tonight. Lou and I, really Lou, but it's going to be hosted by REI Live. We are doing a webinar specifically on trusts. Exactly what Lou just got done talking about. The tax implications is going to be one of the aspects that Lou talks about. But really, how and why do we use land trusts that you have to use to do subject twos? Why do you use that? When do you use that? How do you do that? And then some of these other trusts that Lou just got done talking about. I just put the link in the chat. So guys, check out that chat. Click on the link. Get registered for that webinar. That's in 2 weeks from tonight. Scott,
I want to get controversial real quick on land trusts. On land trust.
Okay, let's come back. Let's come back to it. Okay.
Just so you guys know, this is not boxing gloves. I just have some curiosity for Lou about the people who don't believe in land trust. I think we should come back to it and have a conversation about it.
Let's come back to it. Okay, there you go. Scott.
Yes, sir.
I was asking everybody how they kind of handle seller appointments. And I want you to kind of chime in on how you handle seller appointments and when do you know to come in with any kind of creative strategy?
So I do pretty much a hybrid of what Lou and Pace said. I have a book that I wrote called Savvy, 7 Things Every Homeowner Needs to Know Before. No, not that book. A different book.
One?
Nope, a different book that I use strictly for giving. I give to homeowners. It's almost, I call it like my business card. It just gives me the added credibility when I go on an appointment. The hybrid I say is because I also do exactly what Pace said. I always start off with a cash offer every single time. My intent is cash. When it's absolutely not, or they can't for whatever reason, that's when I can come in with creative strategies if we're doing a lease option or a sub two. But I always start off with massive credibility and I always go with a cash offer.
Can I say how badass that is that you walk into an appointment and you hand them your own book? That is like the freaking coolest thing I've heard in a long time.
And it's the 7 things they need to know before selling to an investor. But when you read it, it's almost all geared toward, look at this guy in front of you is the one. You know, it should have just said in every chapter, call Scott,
right.
sell to Scott. But I worded it more eloquently. But yeah, it's all gearing toward me.
Small book, just call Scott.
Yeah.
Right. We're coming back to you, Pace. I promise you. I do want to get into that because
I want to hear that as well.
I definitely want to get back into that. John, I want to hear from you. You're the lease options king. You taught all the people that we know who teach lease options today. The biggest one I can think of is Joe McCall. You literally taught all these folks how to do lease options.
Dude, I was on the phone with Joe McCall today talking about John Jackson. I'm going on Joe McCall's podcast. We talked about John for like 4 minutes. And John and I don't have a personal relationship, but I get a lot of people ask me questions out of Texas that say, oh, you can't do lease options in Texas. I go say that to John Jackson.
Well, John, here's my question for you. Do you just go straight in for the lease option and that's really just your core thing, or do you offer cash?
I had him a book that Scott told me to give all the sellers. So I give it to all these sellers and none of them call me. I don't know what's going on with that. You know what? Well, first of all, yes, because of the marketing that we do, almost all of the sellers that call us, that reach out to us, are going to fall into the lease option bucket. And I like the fact that Pace used the term bucket earlier, saying the sub 2 bucket. I use the same analogy as the bucket. As the leads come in, especially if you're just doing all kinds of different marketing, the leads come in and they're going to fall into different buckets. It could be a subject to, it could be cash, it could be a lease option. It depends. But what I teach people is this. Is one of the best things you can do in real estate, especially starting off, one of the best things you can learn to do is be the doctor. You see, people get started in real estate. They're so freaked out about making money. They've got their eye and their focus on the money and the potential money. They're forgetting the whole reason they're in business, which is to help people. And you've got to be the doctor. And that means you've got to listen. So be the doctor, listen to what their situation is. Are they moving? Have they already moved? Are they behind on payments? What's going on in their lives that's causing them to need to sell this house? And once you know that, then you can write that prescription and hand it to them and say, all right, here's my prescription. Now it's not your job to make them take the prescription, right? You gave them prescription. They may or may not take it. They may or may not take Pace's cash offer or lose creative finance offer. They may not take it. That's not your job. is to write the prescription and give that to them after you've listened to them. Now, having said that, back to your question, yes, almost all the sellers that reach out to us, because they reach out to us, we don't do any cold calling or anything like that. They reach out to us. Most of them are a lease option deal because we're going to get them full price, no commission. And that's typically what we're talking about. But certainly as I'm talking to the seller, there are times where I'm like, you know what, I don't know if a lease option is best for you. Maybe, let's look at this avenue. Maybe it is a subject to, maybe it is a cash offer. It just depends on their situation. But most sellers that reach out to me are a lease option because of the marketing that we do.
John,
So
are you primarily marketing through direct mail and PPC?
I actually don't do any PPC. All I do in Dallas-Fort Worth is direct mail. Now, we've got other avenues we can use, such as scraping Zillow and texting it through our text platform and this and that. We teach our students how to do that and even how to do free Facebook marketplace marketing and this and that. But what I do, just because I've done it for so long and I'm so good at it, is very, very specific direct mail. So we don't send out thousands and thousands of pieces. I may send out 600 pieces per mailing, but I do that every 3 weeks, and it's consistency. So what happens is out of a couple of mailings, we may get 5-6 contracts out of that. But again, we're doing very, very specific, small. It's laser focused. But yeah, my biggest thing is direct mail.
Guys, Pace, I'm definitely getting to your topic. We definitely want to get to that. Before I do,
just leave it as Pandora's box for the very end. It'll just burst open.
That's what we're gonna do. Last question I have before we get to Pace's topic, which I'm excited about. And also Q&A, guys. If you have a question for any of our panelists, start putting it. We've already been answering some questions as we go, but if you have a specific question for one of these folks, write down who the question's for and then type out the actual question and we'll do it live. I know Pace and I have been kind of answering them as we go, but we'll actually do those live as well. Lou, I'm going to start with you. Your favorite strategy to do in real estate, maybe the best strategy to do in real estate in your opinion, and why?
I never want to spend cash if I can help it. So my favorite strategy is to be able to take over existing financing on the property. That subject to conversation is a big one to me because when I got started in this business, I was 18 years old. I bought my first property when I was 18 years old, and I did it by taking over the existing financing on the property. Now, back in the day, they had a thing called NENQ loans, non-escalating, non-qualifying. For $45, you could take over somebody else's financing. And then damn Congress took it away from us, 1982. They passed the Garn-St. Germain Federal Depository Institutions Act. And in there, they said the banks can put in the due upon sale clause in the mortgage. And that was like devastating to me because I had really enjoyed buying property without going to banks and qualifying for loans. So what happened was I actually read the law, which is a very key takeaway from this. If anybody ever says this is what the law says, you need to read it for yourself because there's many interpretations and color of law out there, which are misinterpretations of reality. So what I did was actually read it and discover that they had an escape hatch in there. They had the ability, and I imagine Congress putting an escape hatch in there for themselves, but it's for anybody that knows about the escape hatch. When you place your property in trust for estate planning purposes, essentially the lender is prohibited from calling the loan due. Now that was a seismic shift in my world and in my life, because starting back then, fast forward to today, I have never been to a bank to qualify for a loan on a single family or small multifamily property. Never have used bank financing, never want to. I've discovered that you can get the money from other sources, private money sources, IRAs, 401ks, personal funds, as well as you've got the ability to take over existing financing on the property. And if there's equity, then the sellers will carry back financing on their equity in some cases. So that that is my favorite strategy.
Scott, you know a thing or two about non-qualifying loans. You want to?
Yeah, I started off with non-qualifying assumptions, but that I had a curious question for you, Lou, when you said that, because I don't know if it was state by state different, but I started buying in 1994. But at that time, at least from best of my knowledge, they stopped non-qualifying in 87 and 89. And you're saying 82, which is why I'm curious if it was different in different areas.
No, they didn't stop it. What happened was the banks could begin putting the due upon sale clause in.
Ah.
So there were still loans out there that you could step in and take over. But once the camel's nose was under the tent, it was over. They wanted to get everybody out of those loans as soon as possible.
Gotcha.
Scott, your favorite strategy, the best strategy in real estate, in your opinion?
Well, I love all real estate. And the reason I love real estate so much is because any person with, I always equate to myself, high school dropout with no special education, no special training could make a multi-million-dollar lifestyle. And there's the only industry I believe you can really do that is real estate, or where anybody can do it. But my by far favorite strategy is what we talked about earlier, and that's my slow flip strategy. And the reason is because I get to work once, that's why we love real estate. And then I'm getting paid now. I have 115 of them now. I think 55 of them are paid off. And so you get to a point once they start hitting that 5-year mark where nothing else matters anymore. We can do more deals. We could not do more deals. We have the ultimate abundance. And in a short time, where the typical real estate deal is a 30-year mortgage or a 15-year mortgage or 20 years. And we try and fast forward that and accelerate it and get you free in 5 years. And that's why I love slow flips more than I love any other part of real estate investing.
That's a beautiful thing.
Guys, I just put a link in the chat. Scott actually came to REI Live and did a full presentation on how to slow flip. And I just included the YouTube link there that's got tons of views. Guys, go check it out. Scott actually details step by step how he does his slow flip model. So go check out that YouTube video. It's an incredible video. I highly recommend it. John Jackson, your favorite strategy, the best strategy in all of real estate.
It totally depends on what someone's desires and goals and comfort level is. It's almost like saying what's the best investment strategy for the stock market. It's going to depend on what someone's desires are, goals, and comfort level are. For example, Lou was talking about taking over payments subject to. That's a phenomenal strategy, but you also have to understand that in a lot of cases, you take over a house subject to, you better have some reserves, because the house may be behind 3 or 4 months in payments, and maybe the house sits empty for a couple of months. You've got to understand what the risks are there. Subject to is a great strategy. Sandwich lease options, great strategy. But you better have a few months of reserves, or guess what? Because here's the thing, in real estate, here's something you never want to become. You never want to become the desperate seller. There's a term in day trade. There's a term in day trading. It's called a long-term hold is a day trade gone bad. And that same thing is true with real estate. I work with so many investors that I end up lease optioning their properties because they rehabbed them, had to try to refi out of the hard money loan. They still sat empty for 2 months, 3 months, and they didn't plan on holding it for that long. When you go, some of the lowest hanging fruit out there, if you're calling sellers or you're calling homeowners, some of the lowest hanging fruit out there, guys, is for rent by owner. For rent by owner, because for rent by owner, it falls into 2 categories pretty much. They're either investors or they're an accidental landlord. Those accidental landlords are great low-hanging fruit. But anyway, so the point of all that is that it depends on what your comfort level is, and you've got to know what to be prepared for. So for me, lease options, what I've done since 2003, they're so easy. They really require 0 brain cells to do, just because I've got them down so well.
Pace, I have a feeling I know what you're going to say, what the best strategy in real estate is. I want to actually ask you a couple of specific questions and then get to the trust debate, possibly. I want you to touch on what John just said. Subject twos require, and even, sandwich lease options, some certain lease options do require a certain amount of reserves. I don't know exactly. We've never had this discussion. I don't know exactly how you structure your subject twos. Do you agree with that? And if not,
1000% agree with that.
okay. Well, then never mind.
John calls it his reserves, or maybe he calls it something else, but we call it our war chest. And we call it a war chest, emphasis on war, for a reason, because you have tenants, you have lease. We do lease options as well as part of our exit strategies. We have a lease option right now where our option tenant gave us $7,500 as an option fee. And 4 months later, here they are not paying their rent. So what do I got to do? I got to evict them in the midst of a pandemic, right? So we've got to make sure that we've got a war chest to go to war in those situations. So I agree with him entirely. So the way that we structure it, I actually just did an Instagram live today, guys, where I was at a manufactured home that we took over, seller finance, subject to and seller finance in my world. And I'm sure Lou agrees with me, other than the disclosures, and you have to make sure the seller understands things on subject to at a much higher level. You're essentially just taking over, you're creating debt without a bank, right? There's financing there that you don't have to necessarily qualify for. So I took over this seller finance situation, cash to the seller, the closing costs, renovation, and what I call marketing costs, and also my maintenance cost. I raise all of that from private capital. So what's my maintenance? My maintenance is that vacancy. So up front, while I'm renovating and I'm looking for a renter and I'm stabilizing the rental, I actually borrow enough money that I'm into that $0 out of my pocket, and I have money sitting in my war chest. Then when my renter moves in, whether it's a lease option tenant or just a straight up rental, or Airbnb, we do Airbnb as well. Now, when that income comes in, we take anywhere between 10 to 20% of that income right off the top and add it to the war chest long-term forever. We always, every single month, add money to our war chest for vacancy and repairs, or if there's we had a slab leak on one of our properties like 6 months ago on a lease option. And my tenant, the lease option tenant, it says, I know that this is technically my responsibility because I'm the option tenant. Oh my gosh, I don't have the money to fix it. So we had to go in there and fix it because the tenant didn't have the money to do it. And we structured it and fixed the way the paperwork was done, so the tenant, would end up having to pay us back. But 1000%, John is correct. I call it the war chest.
Pace, let me ask you a question, because again, I've never really had these conversations with you. We should do our own podcast together.
Yeah,
for sure.
I'd love to.
Because I don't know why we haven't done that in the past. But I just want to make sure I heard you correctly. So you, on a subject to, you take over the loan subject to the existing financing, but you also raise private money to take care of repairs. So you've got kind of two pieces of debt on the property.
Correct.
What's the long-term? How do you kind of handle that long-term? Is it just, you're just taking care of it at however many years is left on the loan? Or
so it depends on the lender.
What's long-term look like?
Right. Depends on the lender. Like I have a lender here named Gary, and Gary has $45 million. He lends to me at 8% amortized money in second position. So I go to Gary, and Gary puts a note against the property. We created a note and a deed of trust, and he has protection on that property, and he collects a payment. So I go through a servicing company. We pay the servicing company. They distribute the funds equally, and the lender gets paid out long-term on a 30-year note. Now, I do have other lenders that come in and go, hey, I'll give you money at 8%, but I want my money back in 5 years. So what do? I then structure my exit strategy according to my lender. Now my exit strategy is going to be a 3-year or a 4-year lease option, which we can do here in Arizona. Texas is a little bit different. Obviously, that's why John's the man on that stuff. So I structure my exit strategy to match up with my lender's money that they brought to the table. So let's say that I tell my lender 5-year term, my lease option tenant at the end of 3 years decides I'm not going to execute this option. What do? I either get another tenant in there. I either take that's one. I pay the lender off with my cash flow possibility. 2, I just list it on the retail market, sell it 1031 into another deal. And now I don't need a lender on my next deal. Right. So I just match my lender to the exit strategy, if that makes sense.
Gotcha.
Pace, can I ask you a question?
Yes, sir.
I'm curious. I'm sorry for cutting you off, Brian. I'm just curious. What is when you buy in sub 2, what is your criteria as far as your loan to value, or how are you structuring which ones you'll buy and which ones you won't?
I could not care any less. I'm very controversial on this. A lot of people disagree with me. I do not care about loan to value. I would say the majority of my subject twos that I purchase are probably in the range of like 87 to 91% of loan to value. I do have a lot there.
Is that with both debts, or is that just
with both debts? I have like the property I just bought in Ansley Park in Atlanta. I paid full retail. I'm at 100% leverage on that property. Okay. So is that my average deal? No, I have deals that we pay 50 or 65, right? But I'm just saying, for me, if it hits my threshold of cash flow and it's in the area that I care about, this is what I say. Equity comes, equity goes, but the cash will always flow. So if I look at Maricopa County, for example, 50 years running average on rent rates, even in a bad market, what happens to the rentals? Bad market, rent rates goes up. Did in 2008, currently doing it right now, has always, when we have a crash, rent rate goes up. So for me, as long as I have my war chest allocation and I have enough cash to weather a storm, we have a risk analysis person on our team that comes in once a quarter and looks at the cash that we have versus the properties we have. And as long as our equation matches, I'll take it over. So for me, I tell people straight up, my answer actually to you, Brian Tripp, about my favorite strategy is all of these strategies, but here's my favorite strategy of all time is working with wholesalers' dead leads, right? So I go to wholesalers and I say, hey, you guys are doing all this marketing. Let me have all your dead leads and I'll pay you every time I close it, whether it's a lease option, whether it's a sub 2, whether I turn into a seller finance, whatever. And I will pay up to full retail, 100% of LTV. I will, if it cash flows appropriately.
Pace, we got one question for you. We've been answering questions as we go. You mentioned a second ago about having to evict a tenant. I think that was you, right, Pace? You had to evict a tenant.
Yeah, a lot of people are saying that you can't evict the tenants. It's actually, there's so much misinformation about not being able to evict tenants. Arizona, we've probably evicted 4 tenants in the last 12 months. 9 of those months have been COVID related, or 11 of those months have been COVID related.
Gotcha.
So, see, this is what I'm saying. Anna Hensley says to the panelists, hey, where do I send my dead wholesale leads? Guys, if you are a wholesaler watching this right now and you are not attached to a Lou, a John Jackson, a Scott, or a Pace, you need to find somebody or Brian.
What the heck's going on here?
Brian buys up all the deals. I don't need Brian buying everything. So you guys need to find a creative finance investor, either A, learn from one of these guys how to do it, or 2, find somebody to go to and say, I know this seller has pain. I know they have pain, but I can't solve their problem with cash because they owe too much money or whatever. Bring us your dead leads. We will call your dead leads and revive them, almost like we're the crypt keeper bringing these dead bodies up from the ground. We can revive situations with creative finance, and typically you can double your conversion rate, sometimes triple your conversion rate when you're utilizing these strategies that Lou's been teaching since. Lou, you've been teaching this since the 80s, right?
Yep. I started teaching in 1986.
Absolutely unbelievable.
So guys, we don't have any other questions in the Q&A. So as far as I'm concerned, we still have, 25 minutes left. And I feel like that this topic that Pace wants to bring up may take every bit of 25 minutes. So Pace, the floor is yours, my friend.
Yes, please. So Lou, thank you so much for being here. I respect all of you guys, by the way. I wish Lou, Scott, and John were more Instagram active. I have to go on YouTube and watch all your stuff, but I do love all 3 of you guys. I respect you guys tremendously. So thank you so much for letting me hang out with you guys. So I get to travel all over the country. In fact, Brian Tripp, if you remember, I came out in 2019. I did meet Lou back then. We were lucky to present at REI Live there in Birmingham, it was such a great event, by the way. I'm so sorry I missed 2020. I'm sure it was amazing. I'm so sorry I missed it.
Scott and John were both there this past year at REI Coaches.
I imagine that's when he did his presentation that you're talking about.
John, which one? Scott?
Scott, yeah.
No, this is when he came and spoke at REI. You're talking about the REI Coaches Conference that you came and spoke at. You spoke at the first REI Coaches Conference, and then we did a coaches conference back in October where Scott and John were both there, and Lou was there too. All 3 of them were there. You missed it.
I wish I made it. So I was
Well,
traveling around the
2021
country.
is coming up, Pace. So November 4th and 5th, put it
We're
on
coming.
your calendar.
We're coming. We unfortunately had another thing at that exact same time. We couldn't make it. Jamil and I were upset, but I've been traveling around the country for quite a while. Okay. And it depends on who you're talking to. I have a few people on YouTube, which, you know, that this is the day and age that we're in right now, is that a lot of information's on YouTube, both good, bad, and indifferent. But there's a couple of people on YouTube out of the Dallas market that have an argument that I don't necessarily agree with. I'm just curious, Lou, you are the godfather of this. So I'm going to ask you the question primarily. They disagree with the Garn-St. Germain Act being able to utilize a land trust as a way to thwart that. They say that a land trust is not a family planning trust. Therefore, that does not actually prevent the due upon sale clause. What say ye?
So the actual act itself says an inter vivos trust, and that means a living trust, and a land trust is a living type trust. So that's the reason that works. And by the way, it's worked for all of these years. So if the lenders were to take that position that a land trust does not meet that criteria inside the law, well, they haven't taken that position before now. Or if they have, I'm not aware of it. I've never heard of it. And I've got licensees in my system in all 50 states and even foreign countries as well. We've never heard of anybody bringing that up as an issue.
I appreciate that answer. So it sounds to me like you're saying, well, the land trust, in fact, does make all the reach all the requirements for the Garn-St. Germain Act. I apologize. Yeah. And that is the way to go. So for anybody that doesn't know about trusts, let's talk about some of the benefits of a trust and why you should use them. Number one, anonymity, right? Besides anonymity, what is a big reason why you should use a trust when purchasing real estate?
Well, that's a great question. In fact, that's one of the gifts that we're giving 2 weeks from now, right? That's going to be 30 benefits of trust. We're going to talk about a whole myriad of benefits, but we'll talk about some now. So I call them the 4 P's: privacy, protection, probate avoidance, and profits. So based on those 4 P's, I kind of break it out from there on all the different benefits that you really can derive from that, from really just starting with yourself and your own assets right now. So your own single family home, your own vehicles that you have, your own bank account, getting those in trust is one of the most important things you could ever do in your life. If you never bought another piece of real estate, at least if you did that, you would be really setting your family up for success. So one of the other benefits is probate avoidance. And you cannot avoid probate, or your parents cannot avoid probate. I found out that probate was just not a problem for dead people. They just don't have any problem. but for living people, probate is a big deal. So what happens is that when you place your property in trust, then what's happened inside the trust is you've already determined who's going to get it. So there's no need for courts and lawyers and delay and expense. It's completely eliminated when you embrace trusts. So it's one of the biggest movements anybody can make in their own personal life, and yet nobody talks about it. Attorneys shy away from it. They say, you got an LLC, you got to do fine. And they really don't push you where you need to go, which is to get your assets in gear and get your things in trust for sure.
Love that. So so for example, like a John Jackson, okay, in Arizona, what's interesting is that if I buy in a land trust, Lou, and I want to buy a title policy, no title company will issue a title policy to me without me naming the beneficiary of a land trust. We are one of 2 states that require you to name the beneficiary of a land trust. Do you have any way around that?
do. I do. I am so glad you asked me that question because there's only 2 states that have an issue, and that's Pennsylvania and Arizona. You're absolutely correct that Arizona.
And I live in one of those.
Exactly. And Arizona does require you to disclose who the beneficiary of the trust is. What's interesting about that is they do not say it has to be an individual. So what we do and what I have is a land trust is the owner of the real estate, period. The real estate is owned by a land trust, but one of the unique features of a land trust is it converts real estate into personal property interests. So you don't own the real estate as a beneficiary. What you own is the personal property, meaning the avails and proceeds, which may flow from the trust. Well, what does that mean? That means I can put those beneficial interests, those beneficial shares in another type of trust, and that's called a personal property trust. And yes, we are going to be covering that on the webinar. So a land trust can have a beneficiary, and that's a personal property trust. And that personal property trust is exactly what we tell our clients in Pennsylvania and Arizona to disclose. You just disclose that it's another trust.
Pace, it sounds to me like you need to get registered for that webinar, my friend.
Well, so here's the thing is I agree with everything Lou is saying. I'm just in one of these weird states that doesn't, allow for that. And then I also spent a lot of time in Texas. I'm buying a lot of Airbnbs in Dallas. And so I'm flying into Houston. Actually, a lot of people here are friends with him. I'm hanging out with Scott Horn the whole weekend. I think, John, you're really good friends with Scott, right?
Yeah.
So I'm hanging out with Scott over the weekend in Houston. Then I'm driving up to Dallas to buy an Airbnb. And I get a lot of people that talk about this trust situation. And it seems to be, and it's funny, I'll get into a group of 3 or 4 guys and they turn into like spitting matches over arguments over whether they should use a trust or they shouldn't use a trust. And one guy will say, I've used LLCs for 20 years and I've never had to use a trust. And then the next guy says, use a trust or else this, and this. And it seems to be a contention in the creative finance space.
One thing to that conversation, one thing to that dispute that is indisputable. If you don't use a trust, there will be probate. So they have not set themselves up for a true estate plan without the trust. There will be probate. Those shares of the LLC, the distribution of the LLC will have to go through not only state taxes, some states do tax the estate itself, and some states, so you got your federal, and by the way, that's another thing that the Democrats would change, is that would the inheritance tax. So right now we have extremely favorable inheritance tax that will change in this new administration. And then there's state level taxes as well. So there's 16 states that have their own level of taxes when somebody dies. So it is something to definitely consider. But back to the argument, you can't beat the trust because that's the only thing that will avoid the pain, suffering, and delay of probate.
So is there a benefit to buying a lease? Let's say I'm acquiring a lease option. I'm doing a sandwich lease option, which John teaches a lot about. Is there a benefit to doing that in a trust?
Absolutely, positively. So if it's a sandwich lease option, I wouldn't even buy that thing unless the seller would place their deed into at least escrow. And number 2, I would prefer that they move it into trust and then the beneficial interest be placed in escrow. So that protects both of us. Because here's the problem with buying a sandwich lease option. It's whatever happens in the seller's life that could infect your life. So the fact that they, get a divorce or they get sued and they get a partnership split, whatever might happen, or die, that still has the opportunity to impact my life because I've impacted somebody else's life by moving them into that property. So that's one of the concerns that I always have with the concept of a sandwich lease option.
Yeah, it's so true. You can, if you will, fix an issue that comes up on your end tenant, on your end optionee, the buyers coming in. They lose their job, they get a divorce, whatever, they move out, whatever. Okay, well, you can fix that. You can't fix the sellers getting a divorce.
Right. Exactly. Yeah, so you got to really and it does benefit you as well if you can get the seller to take that one more step, which is not a hard sell, by the way. It's not a hard sell because it really protects both of you. And the sell is so easy. You can say, I want to ask you one more thing. I'm going to make the payments. I'm going to do what I said I'm going to do. And the only concern I really have is if something were to ever happen to you. And we've got a solution to that. If you would go ahead and move your property into trust. Now, you're going to be the beneficiary of the trust. It's not a problem, but we're going to put the beneficial interest into a escrow, and then it's going to have escrow instructions so that if anything happens in your world, we're going to be covered on that. Will that work for you? And that works for them.
Lou,
John, on the exit with a lease option tenant, right? Let's say the lease option tenant, I had this question pop up the other day. Can a lease option tenant purchase the property through a refinance rather than an actual acquisition of a new mortgage? Meaning, can they apply for a refi versus a new loan?
It depends on the lender.
Yeah, so it's going to it's going to depend on. Sorry, Lou. The question was to me. Okay, you've been yapping for an hour and a half here.
Please, John, go.
It's going to depend on the lender, but most lenders are going to require a straight finance. Now, the reason somebody may desire to buy a refi is the idea that it's easier to get that financing because it's a refi. But most lenders are going to require just an outright finance because there was no note to refinance. But at the end of the day, every lender has different underwriting requirements. So I've done whatever it is, 700 and some odd lease options. I don't know what it is now. Every single one of my tenant optionees bought through conventional financing, normally through FHA.
Are you servicing a lease option with your tenants?
No, you mean as far as the payments that they're making?
Yeah. Are they going through a servicing company, or are they just going direct to you and then you're going direct to the seller?
So on a sandwich lease option, they would go directly to us or to our students. But for what we do mostly is lease option assignments. So wholesaling lease options, they're just going directly to the owner.
Love it.
guys, we're going to wrap up. Pace, thank you, by the way.
Brian, we're just getting warmed up, bro.
Really some incredible questions.
We're
We're
not
not going 24
hours.
You want
hours,
to go
Pace.
away, Brian? I mean, me and Lou and
This isn't a 24-hour. I do want to look. We can stay on. We can jam, guys. Listen, we can stay on. We can jam. I want to formally wrap up, and I'm welcome to keep. We'll keep the thing going. We've got 100 so people on here that we'll keep the thing going as long as y'all want.
My wife says it's time to make babies. So I'm in the phase of my life where we're trying to make babies.
Appreciate that, Pace.
My girlfriend said it's time to make babies, but I don't know what my wife says.
The club.
Guys, before we go, make sure that you check out the chat. Make sure you get registered for John's webinar. Make sure you get registered for Lou's webinar. Both incredible things, especially when it comes to trust, which obviously we talked a lot about tonight. A lot of valuable information given tonight. Pace, thank you so much for asking a lot of those questions. Some of the questions, some of the information given tonight may be a little bit higher level. And if that is the case for some of you who are watching this, I know John is going to start at the basics, and Lou, I'm going to be on there with you, and I'm going to make sure, and I know you're going to start at the basics too, but I'm going to be there to ask the questions to make sure that everybody kind of is on the same page to where you can get on these webinars and really learn from a base level and start to get some really high level information from both of these incredible guys. So before we go, I want to give everybody kind of a 60-second parting shot. Your kind of wrap up, your summary of the evening, your summary, any last words. Lou, again, you're on my top left. I don't know how you got shifted because you were at my bottom right when I got started, but you're my top left. I'm going to start with you. Pace will end with you, but if you guys want to stay on and jam, we have over 100 people on here. You're welcome to do that. I'm not going to shut up anyone's free speech this evening. So Lou, I'll let you start.
Well, I've been buying, holding, and selling property now for over 40 years. I can tell you, you guys are in the right place. There's no question that this is the best thing for the average person to be able to do on the planet. I didn't have to go to 8 years of college. In fact, I went to 1 year and got disgusted with it because I didn't feel like I was learning anything. And I left college. So this is a great business. This is something that can be passed on from generation to generation to generation. And definitely you're doing the right thing, learning from these masters and just really putting yourself in a position to achieve everything that you want to achieve in life. I'll give you another bonus here. I've got a book on Amazon.com. It's called Buy, Hold, Sell. Isn't that creative? Buy, hold, sell, because we hold while we're selling and that kind of thing. So I'll give you $5 off of that one. You can go to streetsmartinvestor.com /buy, hold, sell. And that'll give you an extra bonus here for being on board. But if you can learn this process of the buy, hold, sell, I promise you're going to be a lot better off than, and I'm not putting down wholesaling because I buy from wholesalers all the time. But I'm telling you, I want you to learn something other than just wholesaling as we go into this new market, because I think some people are experiencing right now that wholesaling is not what it used to be. Now people are having to remake themselves. I told you that, you know, a group of 10 people came to my office yesterday and they've never done creative anything. They've only done cash deals. Well, people are going to have to change their spots going into this new economy. So I encourage you to get all the information you possibly can. You can look me up on YouTube. We got some great videos and a lot of free content there as well.
Lou, he said 1 minute.
Yeah. Awesome, Lou. Thank you for that. Scott, get to you in 1 second. People keep asking, is there going to be a recording available? Yes, the recording will be available in a couple of days. As I mentioned, and I'm true to my word, I'm actually going to come in and edit and cut out all the free giveaways because I said they're only available to the people who attend live. So I'm actually going to go cut all that out, and then I'll post this for everybody here in the next couple of days. Scott Jelinek, parting words.
I don't have a whole lot of parting words other than to tell you that if you're not active right now, or if you're not doing deals yet, now is going to be probably one of the best years of your life if you get started now. I was thinking about it earlier, especially Lou, when you were saying how long you've been teaching. When I started, and that was after you've already been teaching, we didn't have all this information available to us. And it's insane how much I had to trial and error, meet somebody and you don't know if what they're saying is real. And now you literally have all the information in the entire world in your hand at any given day, and you can learn anything. So it's absolutely incredible. And so, you know, my parting words are: do something today that your future self's going to thank you for, and go out and make it happen. This is a great time in real estate. We you know, we don't know exactly what's ahead, but either way, we're gonna make money.
So many things I would say here. Like Scott said, just do something. Don't spend so much time learning that you don't take action. You know, one of the things I tell people when people come to me for coaching, for lease options, I say, all right, great, thank you so much. We're gonna crush some deals. Your first homework assignment is this. When you come with me for coaching, your first homework assignment is this: no more bigger pockets. That's your homework. People, you know, don't go to bigger pockets for your legal advice. Okay. Like Lou said, he was talking about, you know, reading the law. It's amazing how when you actually read the law, any law, you start actually trying to understand it. But right. Take action and keep it simple, guys. I teach the BUCK system when I teach students. BUCK. B, learn the basics. U, do something uncomfortable. C, get creative. And K, knowledge. You've got to understand how knowledge is. Knowledge is two forms. It's either, oh my gosh, I've got to know that right now, or knowledge is, oh, that's interesting, I'll keep that in mind. The vast majority of information you have access to about real estate is really falls underneath the, oh, that's interesting, I'll keep that in mind. You don't have to know all that much information to get started. Just learn the basics, boom, take action.
Thank you, John. Pace, I'm going to give you your parting words, but hold on. Got one quick thing. Scott, we've had a question in the chat for you. Is your son still sadly a Mississippi State fan? We got a question.
Yes, he is. Wait,
he's not been converted.
Okay. Yes, no, he's still a Mississippi State fan. Absolutely. This is the first year we didn't go to any games, obviously, because of the interesting times. But yeah, he's still diehard Mississippi State.
And then Pace, I'm gonna leave the floor with you. There was a question. You've been answering all the questions, and you left this one unanswered in the Q&A. Pace, how are babies made? Pace, any creative options there?
Why do you think I didn't answer? I wanted to answer it live. It says I can answer it live right here. Brody Ho Oates says, how are babies made? Any creative options? Yes, there are very creative options. I think you should show up to one of these guys' webinars. They're going to cover it on a whiteboard. They're going to show you all the options.
Is there a link? Are you going to share a link?
I got plenty of links, Scott.
I bet he does. Pace, parting words for folks who are on the show. But by the way, guys, thank you so much for attending. Really do appreciate Lou, Scott, John, and Pace. Parting words for the folks who are listening.
I'm going to say something. I everything that Lou said, Scott said, John said, absolutely epic. These guys are amazing pioneers and, the best in the business for what they're talking about. But Brian Tripp, my bro, think about how much money you make on a yearly basis. Divide that out over how many hours are in a year, and you're going to come up with an hourly time frame of how much your time is worth. And then I want everybody that's paying attention to the Zoom to think it probably took 10 hours, maybe 15 hours to put the Zoom together, coordinating, doing all the things that are required behind the scenes to put this together to get these guys on one stinking panel. Brian, you gave up a lot of your earning income and your potential to do this for everybody else. Bro, thank you so stinking much. You have always been the dude. So thank you so much.
Pace, thank you. I appreciate that. It's my superpower. It's my super gift. I really do appreciate you saying that, though. Thank you.
And all these guys, encourage these guys to get on Instagram, because I wish I could tag Scott and Lou and John more frequently on Instagram. Brian and I go back and forth on Instagram all the time, but these guys got to get going. They're crushing it on YouTube, but Instagram definitely helps connect a little bit faster.
My son's teaching me. He's on it.
I've already been banned from Snapchat, but that was a whole court order thing. I don't know what was going on there. I'll get more active on Instagram. I'm in masterminds.
I just joined a couple of masterminds with all of you guys in it. So I actually will be spending a little bit more time with all of you guys this year. So I look forward to it. Thank you so much for letting me hang out.
Guys, thank you. I can't thank you. 4 heavyweights in the industry that had a million things to do on a Thursday night. Especially on the East Coast, it's 9:30 now. Lou, it's about an hour past your bedtime. We understand that, but thank you for staying up with us. And the Scott, you're on the East Coast too, so I appreciate you guys staying up with us. John, Pace, you guys are absolute heavyweights. Can't thank you guys enough for all coming together. And I'm a big believer. Pace, I know we've gone back and forth about this. I'm a huge believer in collaboration over competition, just like you are. You and what you and Jamil do. Just watching you guys from afar. Direct competitors, best friends, and just it's inspiring to see, and it's what I've been about since day one. And I'm honored to be on a panel or to moderate a panel with all 4 of you guys. And then Pace, thank you so much for your kind words. Appreciate that.
Thank you, brother. Appreciate it.
With all that being said, Lou, Scott, John, and Pace, thank you guys, and thank for everybody for watching. This replay will be available in the next couple of days, but we appreciate y'all. Make sure you get registered for John's webinar, for Lou's webinar. Make sure you follow Pace. Make sure you're following Scott. And I'm going to send out an email. I'm going to send out an email with all that info, and we'll end on that. Roll Tide.
All right. Thanks for having me. Have a great night.
Hey, guys.
Awesome. Thank you. Thank you for the opportunity.